So Putin just made a historic speech that will almost guarantee an economic apocalypse. I'm not just talking about a market crash, but flipping the entire world order on its head. This is going to cause decades of financial chaos. Now, this is not good news for anyone, and the world as we know it will forever change. So in his speech, Putin announced the mobilization of 300,000 Russian troops and made very bold statements against the United States and Europe. He said, the West wants to destroy our country and specifically highlighted how Russia is fighting the entire military machine of the collective West. But the most disturbing part is his statement on nuclear weapons saying, this is not a bluff. And those who try to blackmail us with nuclear weapons should know that the weather vane can turn and point towards them. Putin is not just amassing more troops, he's also ramping up weapons production and pushing Russia into a wartime economy. I don't think this is a bluff. He is likely going to pour more troops into Ukraine. When he stationed troops near Ukraine in January, he really did invade. When he threatened to turn off Europe's gas supply, he really did shut it off. So the war is going to drag out and the world is going to suffer for much longer. This game of chess has devolved into a battle of attrition, not just on the ground, but more importantly, in the financial space as well. Now, the big problem with Putin doubling down on the war is that the West is also going to double down on their end. They are not going to just let him steamroll across Ukraine with his new army. They will also be pouring in weapons to keep the fight going. Now, the effects this will have on the economy are going to be massive because it is not just Russia that's mobilizing their country for a bigger war. Putin is effectively forcing the United States and Europe into a mutual wartime economy as well. Sure, the US and the EU are not putting boots on the ground. They are not going to engage on Ukrainian soil. But instead of bullets, they are providing money. Billions of dollars and euros are going to keep flowing into this war, and we need to analyze the impact of what Putin's actions will mean for the economy and how they will affect you, because I believe we have crossed the Rubicon and we are moving towards a future where the West and Russia might never reconcile. I think this is it, guys. This might be the moment where the world officially starts to split apart. Now, the problem with a wartime economy is how money is going to be channeled towards the war effort. In this case, for the West, it's going to be done through money printing or borrowing money to spend. This is going to make the job of the Federal Reserve extremely difficult when it comes to wrestling down inflation. You cannot have Jerome Powell trying to take money out of the system by hiking rates and doing quantitative tightening, while the US government continues to send money to Ukraine. Biden, for example, just announced a $3 billion aid package to Ukraine. But here's the thing, the money will have to come from somewhere. Either you are printing money that you don't have, or you're borrowing it from the future to spend today. The money supply is going to expand again, and inflation from the demand side will go up. And this means the Fed will have to get even more aggressive with their rate hikes to crush demand. If you think a 75 basis point hike is back, we better be prepared for the Fed to punch up and hike by 100 points. It's going to happen sooner or later. The Fed themselves specifically mentioned these during the Jackson Hole meeting. It is impossible to tighten on one side when spending is out of control on the other. The government will have to watch their spending, or that will cause inflation to get out of control as people start to lose hope and they just panic. The US debt is already at 123% of GDP, and if America keeps borrowing money to fund the war, as interest rates rise, paying back the debt will become near impossible. That means a potential default down the road. But if Putin is escalating his commitment to fight, Biden will not back down. He will continue to pour money into the war to prove a point. And it's not just the US, the EU has just backed a €5 billion loan to Ukraine to help them in the war effort. And this is during a period when Europe is already aggressively spending on energy. Their gas bills are through the roof, but they have no choice but to spend on this war as well. Russia is essentially forcing the world to bleed money. Now, the next issue will be a commodity crisis, especially against Europe and the West. I think we already know the situation on the ground. Russia's gas taps are turned off, and the supply is not going to come back online, possibly for good. I think we have reached an inflection point where the West and Russia no longer has a shred of trust or compassion for each other. Putin believes the West is out to destroy Russia, while the West is convinced Putin wants to freeze them during winter. There's no way to find a middle ground at this point, And what does this all mean? Russia will likely cut off the supply of all of their commodities to the West. We are not just talking about oil and gas, but other things like gold, wheat, and wood. Russian resources will no longer go to the West. And as the West continues forward with their sanctions on Russia, Putin is not going to play along with the oil and gas price caps. They are going to divert their exports towards Asia and flood the region with oil. Russian resources are going to keep flowing into Asia. Now we can see Russia is shipping almost 30% of their fuels to Asia alone, and this trend will continue to grow. According to Morgan Stanley, China and India bought a combined 2.7 million barrels of Russian oil products in August, a 54% increase. That is very significant. So the West will be denied cheap Russian commodities, while Asia will be enjoying commodities at a discount. Russia is the world's largest exporter of oil products and the second largest producer of gold. If their supply leaves the Western markets, prices will rise. Now, what does this mean for the economy? Basically, input costs are going to get higher. Companies can no longer benefit from cheap energy to make competitively priced products. If we look at the producer price index, we can see manufacturers paying much more for their cost of goods. It is at 8.7% for the US alone, but it is over 30% higher in Europe compared to their 2020 levels. And sooner or later, producers will have to pass the cost down to the consumer or their business will go under. So inflation is going to spike higher or at least stay elevated around 7 to 8%. And this means the Fed and the ECB are going to be forced to keep interest rates high for much longer. This means the recession that we are in could devolve into a depression if this drags on long enough. The world is currently fueled by cheap goods from China and cheap energy from Russia, and when one pillar collapses, our low inflation world is over, especially for the West. And right now, the biggest danger to the economy is stagflation. Because believe it or not, the Fed still isn't aggressive enough in fighting inflation. Inflation is currently at 8.3%, right? The official numbers. And even with Powell's recent rate hike, we are still only at 3% interest rate at best. The gap is still too big. Powell needs to play catch up with reality, and in order to crush inflation, you need to raise the Fed funds rate above the current inflation. Now, when inflation was over 12% in the 1980s, Paul Volcker had to raise rates to 20% in order to wrestle it down. Powell's not doing that, but he's still only tiptoeing around the situation. He's only hiking 50 points here, 75 points there, and praying for the supply side crisis to end. Well, it's not ending, and it just got worse. The Fed is now sandwiched between the devil and the deep blue sea, and they only meet once a month at the most to hike rates. So if they hike all the way above to 8% now, they will collapse the markets, more or less guaranteed. The entire economy will grind to a halt and freeze up. And this is why I believe the other alternative is more likely, which is a longer period of stagflation. The Fed will continue to do their mini rate hikes until they eventually catch up with inflation, but they have to keep it higher for much longer. And this means we will continue to live in a crazy world where our purchasing power continues to evaporate while asset prices continues to collapse as well. The cost of borrowing will stay high for a long time and companies won't be able to grow as fast. This might be better than the instant depression, I get it, but people are going to get a whole lot poorer for much longer period and there's nowhere to hide. There will be pressure on every investment class and people won't even have money to invest, the bulk of them. Everyone will be fighting for survival. However, the biggest impact is how the world will be split apart across the East and the West, and because globalization is going to break down, we can kiss goodbye to the low inflation world we are enjoying right now. Supply chains will become more inefficient and countries will start hoarding resources and supplies for themselves. We will be moving towards more bilateral trades and a world of permanent sanctions. For example, Russia will be reserving their commodities for Asia, giving good prices to countries that are friendly to them, like China or India that we have seen. We could also have the United States continue their technology sanctions on China, preventing them from buying microchips from Nvidia or AMD. Countries will have to be more self-reliant and manufacture their own goods. For example, because of the US tax sanctions, China's Huawei is forced to produce their own chips domestically, And this will translate to a higher cost of goods, and inflation expectations will have to shift. So even after this recession is over and inflation is crushed, low inflation in the future might mean 3 or 4% and not the old target of 2%. Interest rates might continue to stay high as well and no longer come down to near 0% because demand will have to be controlled. There just aren't enough commodities to go around in the future. And the biggest impact this will have is how countries will be forced to de-dollarize, whether they like it or not. It is very likely commodity giants like Russia and China will want to conduct business without using the US dollar. Putin is already going around the world closing energy deals and taking payments in yuan and the ruble. He has done it with China and he's going to do it with Turkey as well, getting them to pay in rubles for his gas. And this will further chip away at the dollar status as the reserve currency and also reduce demand for US bonds in the future. So domestically in the US, bond yields could rise further over time. Because if you're a neutral country in the future, it makes sense to hold both dollars and the new reserve currency to trade with both sides of the world. If you need to trade with the West, you need dollars or euros. If you need cheaper commodities from the East, maybe you'll need rubles or yuan. The US dollar now is less than 60% of foreign reserves, and we can expect this number to keep falling. The good old days of the dollar as the primary trading currency might be coming to an end. We also see more countries like China move away from dollars and diversify into neutral assets like gold. We are moving into a world where mutual trust is at an all-time low. Basically, we are having a flashback to the Cold War era when everyone was suspicious of each other. And this means that there's even more pressure on asset prices today. The fundamentals are really bad for every asset class in the short term, but longer term, as we move towards a new world order, I believe gold will come out as the winner. If we enter a world of extreme counterparty risk, where countries are getting afraid of holding each other's debt, money will flow elsewhere. And that's why central banks today are still net buyers of gold, even though its price is falling with other assets. We can see central banks fiercely buying gold over the past few months, clocking in at over 40 tons in July. Qatar, Turkey and India all increased their reserves by over 10 tons each. Remember, this is at a period where the US dollar is at an all-time high. Countries are still selling off their US dollar claims in exchange for real hard asset. And if Putin was to really press the nuclear button, there won't be any stock market to talk about anymore. Our paper assets could get vaporized, there will be mass panic on the streets, and inflation will be through the roof. And that's why I've been buying gold for years now and I won't be stopping. It is one of the few avenues of portable wealth that you can take and flee physically with you if the worst happens. Now, of course, I pray that Putin backs down, but I also want to be prepared if he doesn't. So let me know what you think in the comments below. Is Putin bluffing this time? Will the West also double down and up stakes? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.